Welcome back, dear learners. Before the ad break, we did an exciting question whereby we prepared trade and other payables note, that is note number 8, and we also completed the current liabilities section of the statement of financial position. With me here, I have an application question, and it reads, Craig, the owner of Craig Fashions, has not been able to calculate the current liabilities for this financial year. He does not know what to record as current liabilities. May you kindly assist Craig with a calculation of total current liabilities for the year. We are given information number 1 and information number 2. Let us see how we can make these adjustments as we prepare our current liabilities section of the statement of financial position. Number 1 reads, a debtor with a credit balance of 900 should be transferred to creditors. What it means is we have here our debtor's ledger. Remember, it's an asset, so it's a plus here and a minus. But the debtor is a credit balance of 900. Once a debtor is a credit balance, that means we must transfer it now to the creditor's ledger. Liability, plus, minus. If we're to transfer this 900, first we come to the debit side, then we say 900. Then, to complete double entry, we then come to the credit side of the creditor's ledger, then we say 900. So the important aspect is that we are saying plus. So when we come here under our trade and other payables, we open bracket, then we will have creditors control, which is 23,400. We will come, here I said plus, then I'll say plus 900. So I have done that part. Therefore, it is very important that once you are given such information, you remember that once we are transferring a debtor with a credit balance, transferring to the creditors, we'll come and we add that amount. The next information that I have is I have my income received in advance, which is 4,700. So I'll come here, before I record the 4.7, I can close this part now. Then I say 23.4 plus 900, that gives me 24,300. My income received in advance becomes 4,700. Then here I have accrued expenses, which is 2,300. Accrued expenses becomes 2,300. After this, I can then close my trade and other payables. And if I add 24.3 plus 4,700 plus 2,300, I then get 31,300. 31,300. With the 31,300, I then take it to my current liabilities, trade and other payables. Note 8, 31.3, the very same one comes down there. Once I have done that, now I can go and look at the next one. The next aspect that I see here is I have a bank overdraft, and my bank overdraft is 29,000. So I'll come here under my current liabilities, then I'll say bank overdraft. Bank overdraft, and I'll bring my 29,000 here. 29,000. That is my bank overdraft. After recording my bank overdraft, I will then need to see, do I have more information that I still have to record under my current liabilities? There is my bank overdraft. All right. I have information, and it says, the following relates to Stano Bank. I have balance on the 1st of March, 60,000, repayments including interest and balance at the end. Then, payments of 14,000 will be made during the next financial year on the loan. This will be very easy. There might be no reason to open a loan account, but to reinforce the loan account, we'll do the loan account first. Then I'll show you again what you could have done. So the loan account is a liability account, it increases on the credit side and it decreases on the debit side. I'll come here then and I will say my balance brought down. Here's my balance brought down. At the beginning, we're owing 60,000. Then we'll add our interest. How much was our interest? 7,000. Interest is 7,000. Did we make any repayments? Yes, of 21,000. So I'll come here, then I'll say my repayments on the loan are 21,000. So I'll come here. We want to know what is the balance now. So it will be 60 plus 7, that gives me 67,000. Here I have 67,000. And here I will then get my balance carried down. My balance carried down, I'm now saying 67 minus 21. That gives me 46,000. So my balance on the loan at the end of the year is 46,000. That is my balance on the loan. We are told that repayments of 14,000 will be made during the next financial year on the loan. All right? So we now know that the balance on the loan here is 46,000. This is what we're owing at the end of this financial year, 46,000. All right. There are ways that you could have calculated this amount much quicker, but to reinforce the loan account, it is important that you know how to do the loan account, a liability account, increasing on the credit side. And then here is my loan account. We now want to record the short-term loan. I know that on my loan, the repayments will remain the same, that is the 14,000. How do I know it's 14,000? I know that when I made payments of 21,000, I made payments that included interest. So in the 21,000, there is 7,000, which is interest. So if I say 21 minus 7, I remain with 14,000. That simply means the loan repayment in this financial year was 14,000. And if the repayments will remain the same, even if we are given the 14,000, it will still be the same thing. In this case, it remains the same, meaning 14,000. So I'll come here then, I'll say my short-term loan, a part of the loan that I'll pay within the next 12 months is 14,000. That becomes my short-term loan. Once I have that, there it is, 14,000. I can then total my current liabilities and I end up with 74,300. That becomes the total of my current liabilities. Remember, we're preparing the statement of financial position, and under my liabilities, I have my non-current liabilities, but I also have my current liabilities. And in there, I have my trade and other payables, note 8, my bank overdraft, as well as my short-term loan. It is very important, dear learners, once more, that you continuously practice on such calculations. Dear learners, let's go for an ad break, and I will see you shortly.